Back in the action once again. Always great to be here with you guys. It's about that time of day again, though. Time to roll up those sleeves. Time to get back to work. Got a big day coming tomorrow here. And as always, don't forget, it is Tuesday evening. It's June the 18th, 2019. My name is Joseph, by the way. And this, as always, is your nightly newsletter. Now, don't forget, guys, I help traders find high-quality, reliable, dependable, usually profitable trade setups using a simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job is very important tonight. Tonight, my job is to identify the best levels, the best setups, the best situations, the best opportunities that we're looking for tomorrow. That's Wednesday, Fed Day's trading session. And tonight, we'll check the calendar for tomorrow. We'll grab some charts. We'll go over oil, S&P, Nasdaq, gold, and euro. I got a lot to cover here tonight on this video. Got a lot to cover ahead of tomorrow's Fed announcement. And of course, I'm going to jump in here to oil first because you may not have noticed this, but oil had one of the biggest days in almost 6 months here today. And really at this point, the black gold, the Texas T is giving us 4 different scenarios that we've got to be ready for here tomorrow. Let's jump into that oil, that black gold, that Texas T. And like I mentioned earlier, right, had a huge run on oil today. Now, obviously, anytime we see a big, strong move in one direction, we do expect to see a second leg, at the very least, to retest that high, or at the very most, right, to make a measured move. Now, I'm not quite sure if we're going to get that measured move tomorrow. But with this strong move higher and this lack of follow-through, this strong move up, right, you would have thought these buyers would have had no problem retesting that high before the closing bell here this afternoon. And the fact of the matter is they're struggling. And that leads me to think that we're probably going to go sideways here because we get some major news tomorrow. And a lot of these markets are probably going to be ducking and covering here tomorrow as we go into major news. We're going to talk about the major news affecting oil tomorrow because there is actually 2 big news reports on the schedule here for tomorrow. But when it comes to oil, we're bullish. I want to be a buyer. And there are really 4 different scenarios that I've got to be ready for. I've got to prep for the range. I've got to prep for the channel. I have to prep for the flag. And I have to prep for the reversal. So in tonight's video, I'm going to talk about 4 different scenarios. I think we're going to probably end up going sideways into a range tomorrow. But I've got 3 additional scenarios I want to prep for tomorrow. If you're trading oil tomorrow like I am, we got 2 big news events and 4 possible scenarios that I want to get ready for here tomorrow. So make sure you stay tuned here tonight's video and we'll dig into that oil market. Over on the S&P has another big run here, right? 1 big leg, 2 big legs. They barely missed that measured move before collapsing down off the high. Speaking of that collapse down, right, you'll notice it never turns bearish, right? They never jump off of that moving average. And this is the biggest clue in this chart right now, is that higher low. That higher low is a very, very important clue that really doesn't give the sellers a whole lot of confidence right now. That rising support trend line, that lack of follow through. And because of that rising support trend line, I'm definitely looking at some very specific setups here today to be buying going back up to retest that high. Anytime we see a strong move in one direction, we're going to probably end up back to retest that high the following day. But I've got some concerns. I don't want to chase the market higher because we got a range up here. And again, like I said, that rising support trend line is really going to be the big clue here right now. And it pretty much tells me everything I need to know about buying this market going higher, or what it's going to take for those sellers, right, to really get a grip on this going lower. Got a lot of potential traps that we could fall into here on the S&P here for tomorrow. So if you're an S&P trader, make sure you stay tuned for this video tonight. Over on the Nasdaq, now the S&P had that higher low. The Nasdaq, very, very similar here on this Nasdaq, right? Big, strong move up. They barely missed the measured move. Anytime we see a strong move like this, we expect to see a retest of that high. So I'm definitely trying to be a buyer right now on this Nasdaq. But look. Little bit different here, right? We got a lower low here. They got that lower low. That lower low unlocks a whole lot more bearishness than we have on the S&P, which means I'm looking for traps. I'm expecting to see some sellers up here, right, up inside that no trade zone, and I'm going to use those traps as a way for myself, right, and hopefully you to find a reliable entry now going higher. I'm going to dig into that Nasdaq in a lot more detail tonight. The big clue, though, is that lower low, right? That's the big clue here right now on that NASDAQ, and we'll talk more about how to use that clue to find nice, reliable setups here tomorrow morning. Over on the gold is all coiled up. It's not a surprise. We'll talk about the news for tomorrow, but not a surprise considering the major news tomorrow morning, the Fed announcement tomorrow afternoon. We have higher lows. We have lower highs. That moving average is sloped. Buyers can't get a grip. Sellers can't get a grip. Buyers can't grip it. So we know neutral momentum right now. We know we're going sideways. It's a range-bound market. We talked about this briefly last night, obviously, with ranges last night. We want to buy low. We want to sell high. But remember, a triangle. Triangles are really interesting ranges because they really give me a whole lot of important clues. Triangles tell me where to buy, where to sell, where to sit on hands, and most importantly, triangles, because they come together like this, it's a one big difference between triangles and just regular rectangle ranges. Because that triangle comes together like this, there is always going to be a very strategic plan, right, when that triangle comes to an end. So we're going to dig into that in a lot more detail here tonight on the gold. Gold is definitely setting up for some nice, easy setups here for us tomorrow, as long as we follow the right plan. Last but not least here, over on the euro. The euro is bearish here tonight into a trading range. A lot of this will be the same from last night's newsletter. In a range-bound market, what do we want to do? I want to buy low, I want to sell high, and ultimately, I have a very specific pattern. I'm looking forward to buy low, a different pattern to sell high. We'll talk about all my favorite setups for a range-bound market. I'll give you a hint, though. It's that bearishness leading into the range that is the most important clue on this chart right now. So buying it, selling it, I'll even talk about what a breakout needs to look like for us to be confident trading breakouts on that euro tomorrow. I got a lot to talk about tonight, right? Get a range on the euro, range, a triangle on gold. Nasdaq and the S&P are very, very similar, but very, very different in those higher lows and lower lows. And of course, that oil, right? Oil just going crazy today, and we're looking for 4 possible scenarios here tomorrow. Before we jump into this chart, though, before we jump in and put the plan together here for tomorrow's Fed Day session, I want to remind you, just before I publish this video every evening, I send an email out to everybody on our mailing list, and I want to make sure that you get that email so you know when it's time, right, to go live on that newsletter. All I need from you is your name, your email address, and then hit that subscribe now button. And don't forget, when you subscribe and you join our mailing list, your job is not over, guys. You still need to go in and verify your email. I'm going to send you a welcome email. Inside of that welcome email is a verification link so you can give me authorization to keep emailing you every evening, as well as a bunch of goodies in there so you and I can get the most out of working together every evening on this nightly newsletter. So if you want to make sure you never miss another great newsletter, be the first to know every evening when these things go live, give me your name, your email address, and subscribe to that email list. Promise never any spam. I wouldn't waste my own time on sending out spam, let alone sending it to you, right? But again, make sure you check your inbox there, and sometimes those emails get stuck in your spam folder. So if you don't see the email coming from me when you register, check your spam, check your junk, right? And check your promotions folder, for example, right, in NinjaTrader. Now, one more thing before we jump in. I need your help. I need your help. I'm always asking for feedback because I want to make this the best place to learn and earn every evening on this nightly newsletter. I need your help. Give me a couple moments of your time and just tell me what you love about the newsletter, what you hate about the newsletter, what's your favorite market, or which market do you wish I would just skip over and never talk about again. If you were in control over here, what would you do more of? What would you do less of? Or also, when do you watch the video? Do you watch the newsletter every evening, or do you watch it before you trade the following morning? Do you check back in during the day? How do you use the newsletter? I want to make sure I get to know you better as a client so I can make this the very best educational resource and tradable, actionable resource on YouTube. So give me some feedback. It would mean the world to me that you give me a couple moments of your time. Let me know what you love, what you hate. I got a pretty thick skin. I've been doing this for a long time, so don't be afraid to give me some constructive criticism in those comments section below. And then don't forget, you can always call me too if you have any other feedback, any other questions. Maybe you want to ask questions about our free trial, about accessing our free trading classes, or about a free pass to attend our trade room. Any questions you have, pick up the phone and call that toll-free phone number in the upper right-hand corner. I always love talking to you guys on the telephone, so don't be afraid to call the office. No call centers, no big phone systems. You call the office. I actually talk on the phone with my clients. I know it seems crazy these days with all kinds of chat bots and call centers and being rerouted to different areas, right? But call the office. I'll pick up, answer all your questions about getting access to our free classes, our free pass to our trade room, or any questions you may have. And then don't forget, right, if you watch the video every evening, if you tune in every evening on this newsletter, give me a thumbs up on the video tonight. Subscribe to our YouTube channel. It goes a long way at helping me expose this video to other traders who definitely can use and benefit from this information as well. So thank you so much for tuning in here tonight. But first, let's get to work here. Tomorrow, let's get that calendar ready. Tomorrow is Wednesday. It's June the 19th. What do we have? Well, let's put it this way. What don't we have tomorrow on the calendar tomorrow morning? Now, we talked about this last night, right? We know today is, of course, that FOMC announcement, right? Tomorrow is Fed Day. What's the most important thing when we talk about Fed Day? Early in, early out. In my experience, and of course every day is a little bit different, right? Every day is unique, or every FOMC is going to be unique, but most of the time, the best trades are going to happen before 11:15, 11:30 Eastern time on a FOMC announcement day. Markets are open, of course, all day tomorrow ahead of that announcement. The problem, though, is that because that announcement is such an important market moving event, a lot of people will take off early, get to lunch early, so they can come back from lunch early and start preparing for that announcement. Now, you got to remember, right, a lot of traders right now are sitting on the sidelines waiting for that announcement, and then they'll jump into whatever long-term positions, right, they're going to be managing as a trading firm. We are not those people, right? Day traders, really, outside of gamblers, really have no place in trading the FOMC meeting announcement. The volatility that you see at the announcement tomorrow is going to be dangerous, unreliable, and really I would recommend you stay away from it. I realize it will move a lot. There will be a lot of movement after the FOMC announcement tomorrow, but again, right, that movement is coming from people who are entering long-term positions, right? They're not trading with a 10-tick stop, right, in a 15-tick target. Trust me, right? People who are trading after the announcement tomorrow are doing it on behalf of clients for long-term positions, right? Only gamblers are going to be really wasting their time, in my opinion, by trying to scalp, right, that FOMC announcement tomorrow. You're more than welcome to disagree with me on this. I've been doing this for a very, very long time. There are so many reliable times of the day, of the week, of the month that we can be trading and we should be trading. Tomorrow during that announcement is just not one of them. It's just not one of them. So if you like the money in your trade account, hopefully I can scare you enough in this video tonight to tell you to protect your capital tomorrow, especially after 11:30 as we get into that lunch hour, because things tend to slow down. And then, of course, we get the gamblers that come out, ahead of the announcement. And when you trade alongside longer-term traders, gamblers, you're not going to see the the same type of personality you would see outside of these big news events. So tomorrow morning, get to it early. My job tomorrow is to get to my desk as early as possible, right? And find those setups, again, before 11:15, before 11:30, and then be careful as we go into lunch. And then the afternoon session tomorrow, you got that big news report coming out at 2 o'clock, but it's not just the news report. Then you got the press conference, right? You're going to be listening to Jerome Powell tomorrow, probably until about 3:30 in the afternoon. So it's not just 2 o'clock. It's 2 o'clock and then the press conference, right? So there's going to be a whole lot of very unreliable price action, again, in the afternoon, tomorrow afternoon. You're more than welcome to gamble away your money on these news events. I would recommend, though, personally, my strategy is always wait for more, wait for clearer skies and do your trading there. So early in, early out tomorrow is definitely going to be the name of the game. Get those setups early, make your money, and then get the heck out of there. Let that thing crush everything at 2 o'clock, and we'll come back and do it again on Thursday morning. What else do we have tomorrow? Oil tomorrow. Not going to be an easy day for oil traders tomorrow. In fact, whenever we have the weekly inventory report, this of course is for oil traders tomorrow, I always know my cutoff is basically 10 o'clock Eastern time. Now again, same thing applies to the FOMC announcement, right? You're more than welcome to gamble around these news reports, but this is one half an hour of every week. If we can't be disciplined not to foolishly gamble away our profit at the only time of the week that we shouldn't be trading, we have to do better than that. As a professional trader, we need to know, and I always use the analogy of a pilot or a boat captain, right? I mean, how many times have you got on an airplane or you go out in a boat, right? And you look at the water and you say, there's no way I'm going out in that, right? That is what professional traders do every single day. We look at the waters. If the waters are too choppy, we stay away, right? It's not worth the risk of ruining your boat, losing your life, or somebody else's life. This may not be life and death, but it's the same idea. Right? We look out there and we say, okay, these are going to be choppy waters tomorrow around 10:30 Eastern time with your oil traders, right? Again, only applying to oil. So get to it early. My cutoff is always 10 o'clock on Wednesdays. So oil tomorrow really has a very small window. It's going to be that morning session up until about 10 o'clock. And then again, once the announcement comes out at 10:30, it'll usually be about 15, 20 minutes after that news comes out before the market calms down, and then you're running right into lunch, into the FOMC announcement. So really going to be a small window tomorrow for oil traders. And of course, knowing that we want to get there early, find those setups early, make that money, right, and get out of there with our account without any bruises on it, right? So early in, early out, especially if you're an oil trader tomorrow. We got 10:30 Eastern time for the oil report, and of course the FOMC announcement at 2 o'clock Eastern time, right, tomorrow afternoon. Now don't forget, guys, we open up our trade room every morning at 8 o'clock Eastern time, and we're going to get right at it tomorrow morning, bright and early, because we want to make sure we find those setups before 10 o'clock on oil, and again before 11:15, 11:30, right, for the other markets we'll cover in tonight's video. So now you've got the plan here for tomorrow, right? Early in, early out scenarios. Now let's see what the charts are telling us here for tomorrow. Jumping in first to oil, we'll go oil, S&P, Nasdaq, gold, and euro. First thing we see here on the oil is this strong move higher, right? In fact, one of the biggest moves we've seen in almost 6 months, right? This, of course, coming in the back of that trading range, right? They got their 1, their 2, their failure, and back up. So a beautiful setup off those lows. If you listened to last night's newsletter, you were ready to capitalize on that move higher. Now, obviously, I didn't know it was going to keep going this far, right? But that's what happens sometimes when you put yourself in a position to capitalize, right? You just never know how far those moves will go. So the bottom line is, anytime we see a strong move in one direction like this, we expect to see a retest of that high. And this is a very interesting scenario here where you can obviously see they're struggling here, and it looks like there might be a level of resistance here, right, that might be kind of sneaking its head in here, right? Might be that level of resistance up there at 54.39. In these types of environments, there's not a lot that I can use on this chart. So really at this point, there are 4 different scenarios that I want to get ready for. You ready? Let's go through all 4 of them. The one that I expect the most here tomorrow is a range. So I'm expecting to see this market start to go sideways, right, bouncing around. If we have a range with a bull bias, I want to be a buyer down below the low of that trading range. And ultimately, I can buy a breakout through that trading range as long as I have the appropriate setup pattern. So let's talk about that for a second here, right? I've got potentially a range on here. Once I see that range start to confirm here and start going sideways, now what I want to do is I want to buy nice and low. So what's the best way to buy a market that is bullish into a trading range? I want to see the market pull back, of course, to a level of support. Now I've got a couple levels of support here I'm watching right now here on crude oil. Notice I follow this level over, right? Some prior highs, right? That's a key level of support. I mark up, right? I mark up this area, right? A prior high here, prior low there. I really like this area down around that 53.60 to that 53.20 area. So ideally, we get down into this area here tomorrow. If we do end up going sideways inside this as a range, right? We start running sideways here. I'm looking for a basic seller failure pattern to buy off of that low. I'm looking for a strong move down. I want to see the moving average come over, right? Let's do it this way. Strong move down. I want that moving average coming over, right? If I can get a strong move off of this high now, that'll make the sellers start to think this is turning bearish. Let those sellers now try to sell into that moving average. Right? Once those bears take the bait, once they sell off that moving average, now I've got their stops, right? And now I can buy into those stops. I can also buy the pullback to the moving average as long as I'm staying outside of that trading range. So again, if we go sideways here, right? If we start going sideways here, or if we just pull back off of this high, that will confirm this as a range. I'm looking for a seller failure pattern. Let those bears try to sell off the moving average. We're buying into that failure. Or, right, I can also look for the follow-up, which is the pullback setup. The key on these setups, though, is staying outside of that range, right? So make sure you're buying below the range, right, when you're doing that. Now, if it does become a range here, can I buy a breakout? Right? What if the market breaks out? Well, in this case here, right, if it keeps on running sideways here, right, keeps on running sideways now, what can I look for a breakout? What would a breakout look like on this? A breakout on this would have to be one of 2 potential breakout patterns. One is going to be a 2-try breakout, which means a strong run up. The sellers will try once, sellers will try twice. You want to see higher highs on those 2 tries, and that tells me exactly where their stops are, and I can buy right into those stop losses. I called it a 2-try breakout pattern, right? Again, looking for a strong move up. 1 try, 2 try, make sure you get that higher high. That will tell me now that all the sellers are in, and I can buy into the stop losses of those sellers. So that's right. That's the first scenario. The first scenario is we go sideways inside this range. We get the pullback, the failure, that failure, of course, into a pullback pattern, and then back up in. Or, right, we go sideways in a range. We see it jump up. We let the bears try once. Bears try twice. Makes you get higher highs, and we're buying right into those stop losses, right? Last night we called that the pain point, right? We found that pain point, and we're buying right into that pain point. The second scenario right now is going to be a spike in channel. You'll notice how I kind of already have that drawn up here right now. But let's say, for example, we pull back, we make a new higher high, right, from there. Now what I'll do is I'll draw that trend line off the high, bring it down to that low, and then look for that buy coming off of that low. Now that buy pattern, as it comes off of that low, that buy pattern here will oftentimes be a failure pattern. So imagine now, again, we go up, we go down, we go up, right? I don't want to chase after it. I'm going to wait for the pullback. This will usually bring the moving average up and over. I can look for sellers here to try to sell off the moving average. That, again, this is not a range at this point. It's a higher high into a spike in channel. I look for the failure pattern now into that pullback pattern, right, going higher from there. Two setups here right now, a seller failure pattern and a bull breakout pullback pattern. That, of course, is the spike and channel. Okay, next scenario here. Next scenario would be a flag pattern. We go up, we pull back, we go up, and we run lower. This one's relatively easy here because I'm going to do is I'm going to draw a trend line down. I'm going to use that trend line now, right? So as we go lower here, I'm going to use that trend line now to project a channel down here. Once I have that lower high, I look for that hidden channel, right? Kind of a flag channel, if you will. I wait for the market now to pull back. I look for those sellers now to come in, try selling off the moving average, right? And we're buying right into those failures. Same basic idea, right? Buying off the low of the channel, but using that falling resistance trend line as the key giveaway for where that entry will be. And then if we can really get the move lower, right, that will be the fourth scenario, right? First scenario is a range. Second scenario is a channel. Third scenario is a flag. What's a reversal look like? 1, 2, 3 reversal, right? 1, 2, 3 reversal. We look for that strong move down. Moving average comes over. Sellers try to sell it, and they're successful. Remember, at this point now, these buyers are going to bail on this, right? Once they see these sellers successful, buyers will walk away. I'm going to mark up that low, mark up that low now, up to that top. That's going to give me now my hidden channel. I'm looking to sell off that hidden channel, right? We call these 1, 2, 3 reversals. Okay, now my target for that reversal is back down to retest those lows. Right, so it's a pretty hefty move down, right? If we can get that reversal is back down to that 51.82. So a quick recap here right now. We got four possible scenarios. One is this goes sideways. It's a 1, a 2, a failure back in. 2, right? It's a breakout, right? 1, 2 breakout back in, or 1, 2 breakout to keep going. Or, right, do we go higher here? Right? Do we make that new higher high? If we make that new higher high, do we get that channel, right? Find that buy off the low of that channel. Again, that'll probably be a seller failure pattern into a pullback, right, off that channel low. Or, right, do we just simply pull back, right, off of that high, right? We pull back, we find that hidden channel now. That hidden channel is where now I can look for that failure, right, and go back up, right, into that trading range. Nice, easy setup there. But wait a second, that move lower, they may hold that pullback, right? If they hold that pullback, right, if they hold that pullback with strength coming off that move, now we know it's a bear market. Mark up that low, mark up that low, up to that high, and looking to sell off of that high, right? So very, very interesting chart here right now. Very simple chart on this oil, but I've got 4 different scenarios now that I'm ready to go, all for tomorrow morning. And again, it's got to happen early tomorrow morning, right? 1, 2, 3 reversals, 2 try breakouts, failure patterns, pullback patterns. As you can see, I have a lot I'd love to share here with you on this video, but unfortunately right now I'm running late on time and I have to keep this video going. So if you want to learn more about the entire trading strategy that we use every morning in our trade room, all my favorite entry patterns, grab that free trading course. I'm going to put a link in the upper right hand corner for you. I'll also put a big red button right at the bottom of this video tonight on our trading blog. So grab that big red button below the video, grab that big link in the upper right hand corner, grab access to that free trading class. You'll learn all about the 3-step strategy, learn all about my favorite entry patterns. You can grab that link in the upper right hand corner because I got to keep going here right now. We're ready to go on crude for tomorrow. How about some S&P? S&P is bullish here tonight into a trading range. Now, anytime we have a bull market into a trading range, we always know we want to buy low, right? I want to buy low. Now, what is very interesting here right now, trying to buy low, is we've really been plagued by a bunch of trend lines. You'll notice as the market came down, it gave us what I call a two-legged pullback, up and over and in. But you'll notice they weren't able to get that retest of the high, right? And now we draw another trend line down as the market kind of peels lower here. Okay, so those are the key components right now. This is why this market's been so sloppy, right, this afternoon, excuse me. So we know anytime we see a big strong move in one direction, we know the odds are pretty good when we go back and retest that high, if not get that measured move up there around 29.37. Now I mentioned earlier the big clue here, and the big clue is the lack of a lower low. We get a strong move down. The bears, they tried to make a run lower here, right? The bears tried to make a run lower, and you'll notice as I dig into this, right? They couldn't quite double bottom. They couldn't get a lower low. They couldn't even retest it. What that means now is there's going to be a rising support trend line coming across this level, right? That is, as you probably have already heard me say many times before, anytime we see a rising support trend line in a bull market, it acts like bear repellent. Right? Sellers are not going to want to sell this aggressively, right? They're going to want to stay away until they get through this trend line, right, to the downside. So we now have what really could be seen as some great protection here right now, right, against those sellers. And that's exactly what I'm looking for here, right? I got my rising support trend line right now, and I want to see if these sellers will get themselves in trouble trying to sell this lower. Okay, I know right now without that follow through going lower, buyers are still very much in control of this market. And here are two scenarios I'm looking for here to be a buyer right now. The first scenario, what if price goes higher here? If price goes higher, I don't want to trade inside this range. Okay, trading inside the range, whenever I have a range-bound market, is a big no-no, right? We know we're bullish. We know we have a range up here. Right? Again, like I mentioned earlier, trend line comes down. They get over it, but they couldn't get it right. They couldn't get the job done going back in. So we know they're going to want to keep trying, right, to buy this thing back higher. Knowing that, right, if price goes higher here, I don't want to buy inside that range. What I'll do is I'll wait for a trap pattern to buy low. Okay, you can already see it kind of setting up right now. We go up, we pull back. If we make a run for it going higher, don't chase after it going higher. What you want to do is wait for that trap and buy below the low of that range. And you'll notice it will hopefully line up right with that rising support trend line. That's called a trap setup. Okay, a little bit technical here, a little bit technical. But again, because those bears did not retest those lows, because they didn't get that lower low, right, the bears have very little to stand on right now. And if they keep on trying, right? If they keep on trying now to run lower, now we look for a failure, right? We look for a failure. Back to the moving average. Let them try to sell it. And this is what I hope we get tomorrow, because this is what's going to give us the easier move going back in. What I really want to do here is I'd like to see these sellers try to make a run lower on this. When they try to make that run lower, that moving average, of course, will pop over. Now, I'm watching this trend line here, but really what I want to see those sellers try to sell off that next pullback. And when they sell, right, now I know where stops are. And I can use those stops as fuel to go back into the range. Now, hopefully we get that failure, but then really what I hope we get is that double dip, right? That pullback pattern that comes shortly thereafter. It's a failure into a pullback setup. So those are two scenarios I'm watching for, right? One scenario is, do we make a run higher? I don't want to chase after it higher because that puts us right inside the range. If we do see it run higher, stay patient for a trap. Again, you'll have the benefit of that bear repellent, right? That rising support trend line. This is not a bear market. It's got to collapse. It's got to give us some strength for a bear market. We'll talk about that in a moment. Okay, that's my trap set up if we get going higher here. Or what I hope we get, right, is I hope we get the market running lower. Get that moving average coming over. Let those bears try to sell that pullback off the moving average. Now we know where stops are. I can buy into those stops. I can buy the pullback as long as I'm not buying inside that range. Okay, now I know what you're thinking, but what if it does keep going? Right? Then what? Well, here's the deal. We're still very bullish right now. So if I want to be a seller on this, I've got to see it go 1, 2, 3 and run. Right? It's got to run lower, hold that pullback, and jump off that moving average. Right? See, it's not enough. It's not enough to just get a strong move down. Right? It's not enough to just go strong move down. You've got to jump off that moving average. And if they don't jump off it, right, if they can't give us some strength going lower here, there's no reason we can call this a bear market. So how do we turn bearish? 1, 2, 3, reversal. 1, 2, 3. Strong move down, pull back to the moving average, jump off the moving average, mark up that low, mark up that low, up to that high. Okay, you'll notice I don't use that high, I use that high, right? That's the sweet spot now, and now we know where we're looking to sell. Now, much like crude oil, if this market turns bearish here tomorrow, there's a lot of movement down there back into what I would imagine is that range down around that 2,900. So if these bears can take control of this, I would love to see a move back down to 2,900. So we know now the plan, right? Price goes up, looking for a trap low. Just don't buy high right now. Price goes down, looking for a failure pattern because we are not bearish yet. And any failures, right? Anytime the sellers try to take it lower and they fail, assuming there's nothing in my way, right? We got that trend line coming down, as I mentioned earlier, right? That'll be a key level of support there for us as well. So there are three possible scenarios there for us, right, on the S&P. Now, I don't think we're going to see a rally higher here, just a straight line up, right? But if we do see the market jump up here, okay, what you want to keep in mind is you got a lot of resistance up here around that 29.37, 29.40 area. If we jump up, I'm ultimately looking for a sell back down. But remember, because we're bullish, I need to see, what was it called again? Let's see if you were listening last night. It's called a nested failure. 1 try, 2 try, and then back down in, right? Let those buyers try to buy it once, let them try to buy it twice, and then we're selling back down into that trading range. Remember, don't get too aggressive selling in a bull market. That's why you want to wait for the 2 tries after that strong move up. Or what would a breakout look like? A breakout is almost identical to a reversal. Breakout, 1, 2, 3, breakout. Right? Strong move up, pulls back to the moving average. We see it jump off the moving average, mark up that high, mark up that high, down to that low, and we're buying off that low. Okay, so again, a lot to think about tomorrow. This is why our trade room is such a great resource for you guys. So come out and join us tomorrow morning, 8 o'clock Eastern time, and we'll make sure we tackle this all the right way tomorrow. Over on the Nasdaq. Now, the Nasdaq has a very interesting scenario here. It's very similar to the S&P, but the Nasdaq got that lower low. It's amazing how that really small clue, what does it tell me? You tell me. Right? If I say lower lows to you, what do you think? Bearish, right? Right? I mean, isn't that what every, trading for dummies, trading 101 book says? Right? Lower low, we're bearish, right? Well, I mean, no, we're not bearish, right? But anytime I see a lower low in a chart, I always think when I was a rookie, I was told that lower lows and lower highs meant a bear market. And so whenever I see, right, I get a big strong move up, we know what a reversal looks like, right? It's a 1, 2, 3 run, right? It's going to jump off of that low. And I'm not saying this market can't reverse. What I am saying is it has not reversed yet. And the fact that we got that lower low here, that to me tells me a lot of sellers are going to get a little bit more courageous, right? They're going to have a little more guts to try to sell this market. A lot of sellers are going to probably think this is now a spike in channel of some sorts, right? And they're going to try to sell on that move higher. Now, can you imagine what I'm going to do with this? it's not a bull market. Sorry, it's not a bear market, right? It's a bull market. It's not a bear market. So the sellers here who try to sell that high, yeah, you already know what I'm going to do. I'm going to look for those sellers and try to buy right into those stops when they fail. That's the big difference between the S&P and the Nasdaq. The Nasdaq is giving us those lower lows, and that lower low tells me that we're going to see some sellers up here. Let's get rid of this hidden channel here. Let's get rid of this measured move. You guys can see where those came from there. Let's clean this up a little bit, right? It's a bull market into a trading range. It's a very tiny trading range. And of course, anytime I see a small range like that, I know in order to get a good risk reward ratio, I've got to get 1, 2, 3 levels deep, right? We talk about that quite a bit on this newsletter. But the bottom line though is we know it's bullish. We know it's a strong move. We're going to probably end up back to retest those highs. But the big clue that I see on this chart right now is the fact that we have that lower low. That lower low tells me sellers are going to probably try to sell that next move higher, and I'm looking to buy right into that failure, right? If I was a seller, I would look at that top right there and say, you know what? I'm going to put my order to sell right above that high. And then what I'm going to do as a buyer is wait to buy right into those stops. Right? That's my strategy here for tomorrow. So at this point now, I'm waiting to see this price go up. See those bears to sell it. It really all depends on kind of how it sets up. If I can get a pullback to the moving average here, right? Nice strong signal. I'll gladly jump in off the moving average and then into that range. We'll kind of see how the moving average sets up here. What I don't want to see is a run that goes right back into the range, obviously. If we go back into that range now it's just your typical bull market into a range, and now I want to see it go below the range, get that moving average coming over, and then of course, same plan as the S&P. I'm buying the failure, I'm buying the pullback, and we go up from there, right? A failure into a pullback pattern from there. Or maybe it jumps into that range, right? Maybe it jumps up, it goes sideways here, and then from there we get a breakout, right? Strong move up, 1 try, 2 try, find the pain point, right? And you're buying right into that pain point. Remember, that's going to be a very strong move though, right? That breakout has to be a really strong move, or we go up into the range, we jump up, right? But now we see buyers try once, buyers try twice. We can sell that one. That is a what? It's a nested failure pattern. Now you might be thinking, well, wait a second. What's the difference? Watch closely here. What's the difference? The difference is if we run higher here, okay, up to the top of that range, and I see bears try once, and then here's a trick: higher high twice. That's the difference. Right? If it makes higher highs like this on a very strong move up, now you know the profit takers are already out and the short sellers are now in. We now know where stops are, and we also know where those profit takers are going to jump back in again. It's right above that high, or as I call it, the pain point. Right? That's where buyers feel like they're missing out, and that's where sellers wish they would have never taken the trade short. Okay, now watch the difference here. That's the 2 try breakout. Or we go up, we pull back 1, right? See the difference? That's a lower high. That lower high is the difference between the 2 try breakout, right, and that failure. From this point now, though, 1 try, 2 try, and then back down in. Remember, because we're so bullish, you want to let those buyers try once, let them try twice, then you know where stops are, and we can sell right into those stops again tomorrow. All right, guys? So really there's a couple different scenarios here so far. Again, imagine there's a channel coming across. The bears come up, what do? They try to sell it, right? They try to sell off that move higher, and I'm waiting there to buy right into those stops. Or we jump up and we go into a range, right? We jump up and we end up going sideways in here. Very, very likely. At that point, we let the market pull back. We look for that failure off the moving average. Same idea as oil, same idea as the S&P. Failure into pullback. Just stay away from the middle of that range, right? Get in below the range, right? That range, of course, sitting right here, that 08 to 96 area. Okay, or we go up into that range, we chop, right? And then we blast, right? Big move up, one try for the bears, two try for the bears, higher highs now, and we're buying into that failure. Or we jump up, right? We jump up, but we can't blast. We don't get new higher highs. One, two, and then down from there back into that range. How do we turn bearish? On strength, right? 1, 2, 3. Mark up that low, mark up that low, mark up that high. That tells us now where that sweet spot is, and we're just looking to sell off that sweet spot. And just like the S&P, this Nasdaq has a hell of a lot to go for that target for the bears, right? Back down around that 75, 70, 75, 60, that trading range where we left off in last night's newsletter. So that's the plan here right now for the NASDAQ. I've got pretty much everything covered. Time is of the essence tomorrow. And don't forget, I'm covering a lot right now in this video. And if you're here for the first time, I would definitely recommend that free trading class I mentioned earlier. There's a big red button below the video tonight. That'll go over all the terminology that I'm using, the setups. You can learn more about how I draw ranges, channels. Everyone loves that free course. So make sure you take the free course. That way you can get the most out of our time together every evening on this nightly newsletter. Over to the gold now. Looking at gold now, be aware of this, guys and gals. Gold is probably going to be the hardest of all the markets tomorrow. It's FOMC. And anytime, think about it. FOMC, what do? They announce interest rates, right? Monetary policy, and that's going to be a big impact on the dollar, right? The dollar, of course, has a negative correlation to gold. Gold is a shelter market, obviously. Most of us have probably read these read about this correlation in most of the popular trading books. But you got to remember, on FOMC day with gold, gold's probably going to be the one market tomorrow that really you got to be patient. Got to be patient, and don't be afraid to walk away from it if you're not getting very good setups. The most important thing right now, though, on gold is we're completely balanced, completely neutral, and you could definitely feel that today. Market went up, didn't hold the pullback. Market went down, didn't hold the pullback. Market went up, didn't hold the pullback. Anytime we see a strong move in one direction, we typically see a second leg. This obviously broke those rules today, and that's what tells you it's got to be a range. They're waiting on something, and it doesn't take a very experienced trader to assume they're waiting on the FOMC announcement tomorrow afternoon. So we have higher lows, we have lower highs. That creates a triangle. The one thing you want to keep in mind when it comes to a triangle, well, maybe not the one thing, but here's the most important factors on a triangle. First of all, mark up the edges. Right? The edges, the big turning points, right, on that triangle. Mark the edges. That will give me the sell zone overhead. That will give me the buy zones, in this case, right, well down below. It's a range, right? A triangle is a range. A range is balanced. Right? Market is balanced. In this case, the market's taking shelter before tomorrow's big news report. In a balanced market, in a range-bound market, as we talked about last night, right? I want to sell high. I want to buy low. Finding those specific areas to buy low and sell high, I use the edges, right? The swings. So I find my levels there, and I find my levels here. Now, where most people go wrong when it comes to triangles is they trade inside the middle. Stay away from that middle. What you really want to see is you want to see the market try to make a run lower, get those breakout traders trying to sell it, and then buy into their failure. Let the market try to go higher. Let those buyers try to buy it and sell into their failure. Stay away from that middle. And I'm warning you for tomorrow, this could take a while before we get this thing to set up. Now, the last couple times we've had FOMC, we've had some really good setups before the news came out. And hopefully tomorrow is similar to that. But if we sit there right in the middle tomorrow, I think as of right now, I think they said there's a 30% chance they're saying that they're gonna change rates tomorrow, right? Raise rates, lower rates tomorrow. So there's a lot of people, I'm sure, that are kind of sitting on the edge of their seat right now going, all right, I can't wait to see what happens tomorrow because it will have a big impact on gold. So I wouldn't be surprised with that. That's a relatively high odds of a rate hike tomorrow or rate cut tomorrow. We may see it go sideways. If it goes sideways, just kind of get sucked into that no trade zone. Just focus your energy on buying low, on selling high. And what's the best way to do that? Failure patterns, right? Now you know where to buy low and sell high. As we try to go higher here, moving average comes over, buyers try to buy the pullback, right? And we're selling it right back into that range. It's a lot like this one. We go up, buyers try to buy it, we know where stops are, right? And we're selling back in. Very, very similar pattern, looking for, again, at the edges, right, of this triangle. Or we make a run lower. Moving average comes over. Sellers try to sell into it, right? The sellers try to sell off the moving average. We know where their stops are. Looking to buy into those stops, looking to buy that pullback. As long as we stay outside of that range. Failure pattern, pullback pattern. Okay, that's the main component to a triangle, right? Is stay out of the middle, buy low, sell high. And then, as you can imagine, the same breakout principles also apply, right? So strong move up, one try breakout, right? Or we go 1, 2, 3. 1, 2, 3 breakout, mark up the high, mark up that low, right? There's your sweet spot now, and we're buying that pullback. So there's always the likelihood, right, that we're going to get that news tomorrow and we'll get that breakout. But before we get there, though, just remember, your job tomorrow is to buy low, sell high, and fade those breakouts, right? We go up, buyers try to buy the pullback, we sell back into those stops, right? We go down, bears try to sell the pullback, we're buying into those stops. Or maybe it breaks out, right? 1, 2, 3 breakout. Fine by me. I don't care about the breakout. I just have to wait for it. Right? I don't take it personally when I'm wrong about this stuff, and neither should you. The markets don't care about us, right? Let them do what they want to do. Every morning we come out and we say, okay, you tell me, right? You're going to give me a breakout, wait for the proof, trade the breakout, right? I'm not trying to predict anything. I'm waiting for the market to give me whatever clues it needs so I can plan my strategy, right, the way it needs to be planned, right? So watch out for those breakouts, same simple breakout patterns, the 2 try breakouts, the 1, 2, 3 breakouts. And again, I'm just drawing on the screen right now. If you want to see a much deeper dive into all of these patterns, grab that free course I mentioned. It's linked up in the description. It's also in that link in the upper right-hand corner here. Now, there's one more thing that you want to remember, right, about a triangle, and that is the vertex, right? The market's going to come to a screeching halt as this thing gets narrower. Okay, we already know we want to buy low. We already know we want to sell high. What you need to remember, though, is oftentimes when this market gets narrower and narrower as it starts getting closer, the market will usually break in one direction. Okay, I can't tell you what direction right now. It looks like it might want to go bullish, but I can't tell, right? And it doesn't make any sense for me. It's a waste of our time to try to predict it. So I'm not trying to predict direction. What I'm trying to do is I'm trying to wait for that breakout. And then from there, it's literally as simple as when it breaks out, wait for the failure and sell it back in. When it breaks down, wait for the failure, buy it back in. Or do we see the 1, 2, 3 go? If we get it, trade the breakout, right? Buy that pullback. Sounds great. Okay, so just be aware that once we get down to the nitty gritty here, once we get into that triangle, right, you're going to probably see a break up or down there. Okay, don't trade the breakout until you see proof, right? We go up. If they hold it and go, perfect. There you go. There's your proof. Now we know where our channel is. Right? Or they make a run for it, right? Run for it. 1, 2, pain point, right? Buying into that 2 try breakout. Or what is very, very common is we go up, buyers can't hold it, and we're selling right into those stop losses back into that range. Same thing goes to the downside, right? We get the downside here, strong move down, sellers try, they fail, we're back into the range. Or We get that strong move, right? One try for the bulls, two try for the bulls, lower low there, right? There's your pain point now, right below that low for that two try breakout. Or, of course, the 1, 2, 3 breakout pattern that we've talked about many times already. Be careful tomorrow on the gold. Again, early in, early out. It's Fed day tomorrow. Don't mess with that announcement tomorrow afternoon, especially not on a market like gold. Next up, over on the euro. Euro got their pendulum swing from last night's newsletter and never came back up. You'll notice here they ran down and went sideways here. This is a classic example of a bear market into a trading range. Now, a trading range tells me to buy low and sell high. Avoid the middle, right? Anytime I see a range-bound market, I know I want to buy low, I want to sell high, and avoid that middle. The trick to this is use that momentum to tell you what type of pattern that you want to use. Okay, so for example, we know we're bearish, right? We know we're bearish going into that range. The bears have the edge. What I want to do is I want to see the market try to go up, see those buyers try to buy the pullback, and sell into their failure, right? I can be relatively aggressive at selling in a bear market. I've got this trend line coming over, right? I love to use a buyer failure pattern to sell above the top of that range. But what about as we go lower here? Can I buy down there too? You can. If we get the market running lower, we're bearish though. So in order for me to be a buyer, I need to see, what was it again? The nested, right? The 1, the 2. It's basically a 2 try inside, right? That move. Let them try once, let them try twice. Then we know all the short-term sellers are in, the more disciplined sellers are in, and now we know where stops are, and we can buy. Again, counter trend here, so I have to be a lot more conservative on that move. Now, you may also wonder, well, what if what's a breakout look like? Breakout, obviously, strong move up, right? 1 try, 2 try, higher highs, you're buying into that pain point. Target is back up to retest the high. Or strong move up, pulls back, jumps off the moving average, jumps off the trend line, right? What do? Mark up that high, mark up that one, find that channel, and we're buying the pullback, right, to the low of that channel. Okay, same thing at the downside, but the downside is going to be a little bit different because we got that measured move. We had that strong move down today and that measured move target right around that 12,300. So there's a couple things you want to think of. If we get that strong move down now, you've got to worry about you're too low to sell. That's the problem. If we get that big run down, you're too low to sell. So here's what you want. Strong move down, buyers try once, lower low, buyers try twice, trap, right? Trap. Anytime I have a strong breakdown like that, I'm going with momentum, but at the same time, it's a range. And so buyers are going to keep trying to go back into that range. Let those buyers try once, let them try twice. Now, this is a very subtle but very important difference. Again, like I mentioned earlier, it's all about the small details, right? It's those small details that make all the difference in trading. Because we have that measured move waiting below us, I don't want to get too aggressive down there. And anytime I have concern about selling too low, I always look for a trap setup because traps, they're just the best way to avoid selling low or buying high. So that trap high, right, that bull trap pattern will be a great setup here for us if we get that strong move down. The biggest challenge here is going to be this move going right into that measured move, which honestly means we may see this thing run down. It may try once, it may try twice, and we might see that big old reversal, that crown reversal right off of that low, right? Let the bears try once, let the bears try twice, into a trap off of this. What happens is you get that lower high, you draw that trend line over. That trend line is bear repellent, right, as we mentioned, and then we get that trap called a crown reversal pattern. We talk all about those patterns, by the way, inside that free trading class. So we're buying low, we're selling high. I want to sell high, I got my trend line coming down overhead, right? I want to go up. Let those buyers try to buy the pullback to the moving average. selling into that failure, selling into that pullback, and back down to the range we go. We go running lower here. It's bearish, not bullish. So we let the bears try once, we let them try twice, and we're buying now into that failure or the breakout, right? One, big move down. 1, 2, trap, and go. You want to be thinking trap setups as we go lower here because you've got that measured move. And again, FOMC tomorrow afternoon, early in, early out. Euro going to be choppy tomorrow because it's, of course, correlated to the dollar. Gold will be choppy tomorrow, right? And again, remember, oil has a small window of opportunity tomorrow morning, right? We get the inventory report at 10:30, then the FOMC announcement, right, at 2 o'clock. So oil traders, you really got to keep your eyes on that time tomorrow morning. And as always, we're going to have a front row seat for all of this action tomorrow. 8 o'clock Eastern time, we open up our trade room. We always take the first 5 minutes to go over all of our patterns, our rules. That way, everybody, whether you're brand new tomorrow morning or you've been with me since 2008 when we first opened up our trade room, everyone knows exactly what the plan is right when we start tomorrow morning. So come out and join me because as you can see, the strategy is pretty easy. What's not so easy though is applying it to different markets and different situations. We'll do it together tomorrow morning with all of our clients to get started and to get registered as a brand new member and join me tomorrow morning at the opening bell. Join as an advanced course member. The advanced course right below me tonight on this video, right on the website. I'll put all the links, by the way, in the description of the YouTube video. That advanced course includes our beginner, intermediate, and advanced classroom sessions. It includes all the technology, the software, the templates, the indicators, everything. Of course, I'll even remotely connect to your computer and help you set the whole system up as well. And then as always, we execute that strategy every morning together at 8 o'clock Eastern time. If you're not ready yet to become a member, not to worry. We get a great free trial, that big red button right to the left of my ugly mug. Grab that free trial. Inside the free trial comes the free trading class, a free pass for our trade room, and of course all kinds of chart lessons so you can get the most out of our time together here at School of Trade. If you have any questions, pick up the phone, call that toll-free phone number, use that live support tool in the lower right-hand corner. I am always standing by to answer the call, answer all your questions, and help you get whatever information you need the first time around. And guys and gals, tomorrow morning, 8 o'clock Eastern time, hope I see you there. If I don't, come back and see us again tomorrow night when the dust settles after the FOMC announcement, and we'll put the plan together for Thursday's trading session. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.